Hello everyone, welcome to e-lecture on the topic Books of Account. This topic I have taken from the subject called Fundamentals of Accounting, which is the subject included in the second semester of BVoc in Retail and Supply Chain Management syllabus. In this session, we'll discuss the main books of account, the different types of books of account, starting with the journal, ledger, and different subsidiaries book, cash book, trial balance, and final accounts. Let us see what do you mean by books of accounts. Books of accounts are the record used to track the financial transactions systematically. These books of accounts are classified into two categories, that is primary book and subsidiary book. Example for primary books, the journal and ledger. These books of accounts are very essential for the financial accuracy and decision making. In business, in order to take the proper financial decision, these books of account plays a crucial role. So, primary book, under primary book, journal and ledger will come. So, journal is also called as book of original entry. Here, the journal records the financial transaction in a chronological order, in a systematic order. Journal ensures the systematic recording before posting into the ledger. That's why, first time in the business transaction, the transactions are recorded in the journal, therefore it is called as the book of original entry. One example I have given for the journal entry, rent paid for cash, rent account debited to cash account, and you can see the narration like being rent paid in cash. Then ledger, that is the book of final entry in the primary books of account. Here the ledger contains accounts where all journal entries are posted to the ledger account. Ledger will help in maintaining the account wise balances. The next classification under books of accounts are subsidiary books. There are many subsidiary books are available like purchase book, sales book, purchase return book, sales return book. Purchase return book is also called as return outward book. Sales return book is also called as return inward book, bills payable book and bills receivable book. And we have cash book. Under cash book, we have single column cash book, double column cash book, triple column cash book, and petty cash book. Now we'll discuss one by one the different subsidiary books. Subsidiary books are also called as special journals. As I said, as per the diagram, different subsidiary books are available: purchase book, sales book, purchase return book and sales return book, bills payable, bills receivable, and cash book. Starting with the purchase book. What do you mean by purchase book? It records only the credit purchase of goods. Remember, cash transactions are not recorded in the purchase book, because for recording the cash transaction, we have separate book called as cash book. So in purchase book, all credit purchase of goods are recorded. Example, purchased goods worth of rupees 15,000 on credit from XYZ Limited. Underlying factor is on credit. It helps in tracking all supplier payments for the business. Sales book, record credit sales of goods. Once again, cash sales are not recorded here, only credit sales of goods are recorded. Example, sold goods worth rupees 12,000 to ABC Limited on credit. It helps in tracking the customer payments. Purchase return book, records goods returned to the suppliers. Sometime business will return the goods to the supplier in case if there is damages or defected in the goods. Example, returned defective goods worth rupees 2,000 to XYZ Limited. It reduces the liabilities and the stock adjustments. Sales return book, record the goods returned by the customer. Sometime when the business sells goods to the customer will return the goods for various reasons. Example, customer returned damaged product worth rupees 3,000. Here it helps in managing the customer complaints. Bills receivable book, another subsidiary book, it record bills received from the customer. Example, received a bill of rupees 20,000 from Raj Enterprises. It tracks all the future cash inflows. Bills payable book, it record bills to be paid to the suppliers. Example, issued a bill of rupees 25,000 to ABC traders. And this bills payable book helps in planning the payments and managing the credit. Then we have cash book. In the purchase book, sales book, all credit transactions are recorded, but in the cash book, it record all cash and bank transaction. Example, received cash rupees 5,000 from sales, recorded in the cash book because cash is involved in the transaction. This cash book helps in monitoring the cash inflows, not only inflows, cash outflows are recorded in the cash book. Suppose if we make any payment, business makes any payment, that also recorded in the cash book. Cash inflows as well as cash outflows are recorded in the cash book. We have different types of cash book. Starting with the single column cash book, record only the cash transaction. Here, there is no separate option for entering the bank transaction. Only cash transactions are recorded here. Double column cash book, it is also called as two column cash book. Here it records both cash as well as bank transaction. It helps in tracking the bank deposits and withdrawals. Then we have triple column cash book or three column cash book. It records cash, bank and discount transactions used in the business mainly to see what offers or what discount business is receiving. And finally, we have petty cash book. It maintains small daily expenses like stationery, postage, etc. Then the next book is a trial balance. It is also called as verification book. In order to identify the errors and fraud, this trial balance is used. It ensures proper classification of accounts. And finally, we have final accounts. It prepared from all the books of account and summarized the financial performances. Under final account, we are preparing the trading account in order to determine the gross profit or gross loss. Profit and loss account in order to prepare the net profit or net loss. And finally, balance sheet to show the financial position of the business. This final accounts will help in financial decision making. It is required for auditing and tax reporting, and it determines the business growth and performances. That's it. This is all about books of account. Hope you learned this session. Until we meet again, take care of yourself. Thank you.